Yo, what is up? Life is a game. Let me know if you can hear me all right. Yo. All right, good to know. What's happening, Rick, Matt? Fuck this new Twitter layout. How the fuck do I change it back, Jack? Fuck you, dude. Oh, God. Probably don't want to go there. Oh, I can go darker than dim. Look at that. Now we're pitch black. Thanks, Loma, the homie. All right, Reed, Armis. How do I feel about Kawhi? I don't know who you're talking about. That guy is fucking dead to me. Jesus Christ, my desk is filthy. Clean my shit up. What's going on there, Ryan? All right. Show. Let's do this. No, I can mark this shit up fresh. So just give it a couple more minutes here, guys, and then we will hop into it. Give it till 4 minutes on this timer here. The Dubs got screwed. Fuck the Dubs, man. Fuck Golden State. What do you mean they got screwed because of the injuries? Every Golden State championship came down to the other team having an injury. So it's like a wash, right? It's the NBA. Part of sports. And fuck the Dubs, man. Oh, yeah. I mean, the thing is everyone left in air quotes, and they still have like one of the best teams in the league. So they'll be fine. Not worried about the Golden State Warriors. Worried about my Raps, who just won and are now going to be fucking shit tier. But whatever. So yeah, let's get into it. What's up, George Crypto? How you doing, homie? Louise, can you look at stocks, commodities later? Sure. If you have anything you want me to look at, just shoot a message here in the chat, and I will periodically come back to the chat every once in a while, and I'll answer any questions you guys may have, anything like that. If there's specific charts you want to see, if you got questions about my European trip, anything like that, ask anything at all, ask me anything in that chat there. But for now, let's start with the reason why I imagine most of you are following me, which is crypto, Bitcoin, and just kind of what I think is going on with price action, and just, you know, my kind of thoughts in terms of just my thoughts on, you know, what's next. And I'm going to kind of discuss my thoughts from just like a trading perspective, and then I'll also kind of chat about my thoughts from an investment perspective. So those of you that have been following me long enough, know that I treat trading and investing very differently, because in my opinion they are two very different things. So trading for me, generally relatively short term, swing trades occasionally, but we're talking I'm in a trade for maybe a day, a few days, occasionally for longer. But for the most part, I'm analyzing kind of the high time frame, being the monthly and the weekly. The daily is usually where I'll get my tradable levels, the daily or the H12, and then I like to execute generally on the H4. That's how I trade. So when I talk about being bearish, in a trading perspective, that's different than my thoughts on Bitcoin, just kind of as an investment. When I'm talking investment, I'm talking about Bitcoin I bought, 5-6 months ago now, that I plan on holding for a long time, and just kind of managing my spot buys and sells and things like that. Because I am very much macro bullish on Bitcoin. I think if anything, this pump has had me just more confident than ever that we will see a new all-time high at some point on Bitcoin here. So, I'm very excited about that, as I think many of you should be as well. So let's just start with that. So we'll start with just a clean, fresh chart here. I'm going to show you how I mark it up, and then I'll kind of just cover, why I think these levels are significant, and then how I act around these levels from a trading perspective. So if that sounds good with everyone, we will get right into it here. So just gonna quickly catch up here. So yeah, I'll look at XRP, I will look at Ethereum, I will analyze Area 51 memes. If you got any memes from Area 51 that you want me to check out, I will absolutely take a look at those. I find that shit hilarious. One of my favorite things to do right now is scroll through the Area 51 memes. So shit's so funny. I'll go through XRP, I'll cover F, what's happened to Shrek. Logan, excited to see this as a newbie. Been only losing money since I started trading, so pretty excited to see the knowledge working in the church. All right, man. Well, let's turn that ship around, shall we? Cameron, Idris, what's up? Galaxy, what's up? Bitcoin. I'll talk about my trip near the end, maybe, because that's not what I think people are here to hear. Yeet indeed. Can you have a piece of pizza? Absolutely. Do you think new all-time blah blah blah? Okay, so let's just kind of get into it, and then I'll come back to this in a little bit here. So starting on the yearly chart, actually, for a key level here, and God, does this look funny? But we have obviously a key level right here, right? So when you're approaching a high time frame level, you can expect a significant reaction, right? So the higher the time frame, right, the more sensitive price will be to that level. Now you got to remember, we're dealing with a yearly level, so obviously there can be some variation on the low time frame in terms of going above and below that level. But if it's a high time frame level, you can expect a bigger reaction, right? That's why swing trades are based on high time frame levels, not levels from the 15-minute chart. So a level that most of you should have hopefully had on your chart in this move up. See how big and thick this line is? That just means it's more powerful and a better chance of holding. It's quite scientific. Just kidding. So clear level here, right? So this is actually the close, okay, of 2017 and the open of 2018, okay? Yearly level. So lots of reasons why this is an important level. So I can cover this in so many ways, but I'll kind of just give you the Coles notes on it. So why are yearly opens, closes, monthly opens, closes, weekly opens, closes, daily opens, closes, hourly open and closes, why are these levels important? Well, first thing you should do is go and mark some of these levels in your chart, and then go back in time and see how well they work as SR, right? So there's certain types of SR levels that I like to use. There are the implied SR levels, which are things like there's like the physical SR levels where you go and you mark a level that price is reacting to, and then there's like implied SR levels, so yearly opens and closes, monthly opens and closes, all the open, high, low, close. Those are all important SR as well. And then there's obviously your psychological levels, the 10K, 11K, like the round numbers, things like that. So the reason why you might want to be aware of open and closes on candles, whether it be a yearly, monthly, or weekly, is, well, think about it logically, right? So if I'm a large, institution or a large fund and I'm trading, I think it would be more pertinent to trade near the close of the candle or after a candle has closed, whether that be a weekly, a daily, a monthly, whatever it is. And the reason being is if you're trading after the daily candle has closed or towards the end of the day, so let's say we have a daily candle here that's forming. Get ready for some sick art skills here. Let's say we have a daily a candle that's forming, right? And there's your open, right? There's your, and price is here right now, right? So if it closes here, it's obviously a bearish candle, right? If it closed above, it'd be bullish. But this is your bar stick candles, right? So when the open is on the left and the close is on the right, it's a down candle, and vice versa for an up candle. But let's say this daily candle hasn't closed yet, but there's only an hour left. If I'm trading based on the daily candle closing soon, I now have more information about the day's trading and where and price action that has occurred during this day, whether it's bullish or bearish, whatever, if it's reacted to a level. I have more information than the person who took a trade earlier in the day. You have asymmetric information relative to a person who took a trade earlier in the day. Right? So having an advantage of seeing more price action develop, because you got to remember within this daily candle, there's a whole bunch of 1 hour candles, going like this and blah, 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 right? So you have more information, right? Like maybe you're coming into a support level, whereas the person longed up here only to find that later in the day we hit that support and it was obvious, on the low time frame that you start seeing bullish market structure, whatever. You have asymmetric information. So that's one reason why these levels are important. Another reason would be because you want to know, whether it's going to be an up day, a down day, an up week, a down week, an up year, a down year. If you want to predict the direction of the weekly candle, right? Like a lot of traders, they try and, let's say you think it's going to be a down week in price action. You want to try and short as close to the high of the week, right? Or the weekly open. It's going to be a down week. The weekly open is going to be above the weekly close. You want to short as close to the high of the week or the weekly open as possible, right? So it's important to know where the weekly open is, because if you have reason to believe it's going to be a down week, so let's say you can see into the future and the week is going to be down here, it's going to close here. Well, if price is trading above the weekly open, that's where you want to get short, right? So you're going to want to know where that level is. And that's true for any candle, whether it's an hourly, a daily, a yearly, a monthly. If you're trying to predict the direction of price that in that specific time frame, you are going to want to know where the open of that candle is. So if you believe that the next hourly candle is going to be bullish, you want to know where the hourly open is so you can try and get long as close to it or underneath it, right? So that is another reason why these levels are important, right? So especially when you're a trader and you're a diligent one, and on Sunday night you're marking up all your fucking charts and getting yourself ready for the week, and if you're saying, hey, I've got a bearish bias on the Euro USD, the cable or the fiber, and you want to short it, well, okay, I know that if I'm bearish on Euro USD, right, and Monday's trading is like this, and the weekly open is here, I maybe want to look for a short setup here, right? Because if I have reason to believe it's bearish, all of a sudden Tuesday, Wednesday, now we're below and we're going to close the week down here. You want to know where the weekly open is so you can get short as close to or above it and capitalize on expansion to the downside. All of this is vice versa, flipped for bullishness, obviously. So that's why these levels are important. Just a couple reasons why. There's other reasons as well, but I'm not going to go too far in depth to it. But these numbers that's why you see people writing out, the weekly open on their charts, the yearly open, that's why they mark out, the daily open. You can have a whole edge. Your whole edge and strategy could be around the daily open, being like, hey, it's going to be a bullish day. Here's the daily open. As soon as price trades below it, you look to get long because you're expecting the daily to close bullishly, right? You can have an entire strategy around that. Right? And people do. And you can go watch, I believe Tom Dante on YouTube for free, does a great daily open strategy. Or just Google it, right? So, and I've covered it in previous videos as well. So multiple reasons why. And like I said, go on your charts, test it yourself. Don't just believe me. Go mark the yearly, monthly opens on your chart, right? And just see how well they work as, as SR levels. I mean, if you look here, just do an example for you. So this is the open of 2019 and the close of 2018, okay? All right, just be a fucking bitch. There we go. Right, so this level became a thing right here, right? Is that not a pretty nice SR level, right? Resistance, 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 support, right? Obviously, this is hindsight, but would you not have liked to have just been like, oh, look, we just flipped above the yearly open. Maybe I should be getting long, and maybe that's the low of the year, right? And this level wasn't even a level back here, but look, support, resistance, support, support. Go back in time. Look at this. That's the 2019 yearly open. Is that not, again, a very nice SR level here? Once we got above this level, boom, we took off. So these are good levels. They're levels you should be aware of. And that being said, we have one of these levels that price was coming into. We're in this parabolic advance. No one knew where we were going to stop. Well, it's like, hey, the 2000 yearly open sounds like an important level. And if you zoom out, I always like to, at least once a week, completely delete all the levels off my chart and draw new ones. And oftentimes I'm drawing a lot of the same levels, but it's very easy to stare at the same chart for too long and just subconsciously ignore shit, place stuff to kind of just fit your bias, whatever it is. So it's always good to start with a clean slate every once in a while and just kind of refresh and get a new eye. And as you can see, we prick just above the bodies of these candles, and then obviously we've retraced, huge leap. But again, this is a yearly level. Makes sense that it's significant, right? So another thing that I like about this 2018 yearly open is this level here, right? So this is what I would call a bearish order block. For those of you that have been following me not long enough, I am ICT's son, his one and only son. Anyone who claims to know what order blocks are is a liar and a fraud. And I will sue them on my father's behalf. I'm just kidding. It's all price action, right? I just happened to learn my particular flavor of price action from ICT. So he calls these things order blocks. He has breaker blocks, mitigation blocks. These are all just a form of, supply and demand, support, resistance. It's all the same shit. Anyone who's trying to pipe it up your ass that it's something different is full of shit. It's all the same shit. Okay, so you could call this a bearish order block. You could call this a supply zone. Okay, it doesn't really matter. At the end of the day, all you need to learn to do in trading is mark good SR levels. And then, you look for these blocks, pivots, supply and demand zones around those levels to key your entries. One of my traders that I really like and I talk to quite a bit on Discord and Twitter, etc., is XC. I think his name is Run Their Stops right now. Run Their Stops. This guy, love him. One of the homies I can say, look at that, look at this, shout me out, I'll give that a like. He trades level to level, no blocks, no nonsense, right? He just marks level to level, and then when you close through a level, that means you target the next level. You can literally build an entire edge trading like this, and this guy does it very well. So, anyone who tries to overcomplicate shit, usually I'm just like, why? I mean, I see some people who do Elliott Wave. I see some people who do fucking all sorts of crazy shit with indicators, Ichimoku clouds. I mean, whatever floats your fucking boat. But I like the simplicity of PA, and I like how clean it can be. XC has some of the cleanest charts on Twitter because it's just horizontal lines, and I love that shit. Me, it's a combination of horizontal lines and then horizontal blocks. But it's all the same shit. It's all supply and demand, support and resistance, right? So what do we have here is a bearish order block is what ICT would call it. I'm not going to mark it because it's literally like $3,000 big, but funny how this order block is confluent with oh God, the yearly open, right? So weekly order block, yearly level, definitely going to be a strong reaction here. Did I sell this level? You bet. No, I'm just kidding. I did not, but this is where you want to pay attention, right? So what I'm showing you is me marking key levels, and then what I'm going to explain to you is how you can remove a lot of the stress in your trading is by getting good at marking levels and then only looking for trades when price is at those levels. If price is not at those levels, there is no need to be looking at the chart. You can set alerts and fucking walk away. Unless you're degen scalping on the 5-minute chart like you're Gainsey, some wild fuck, another legend obviously, but you know that's not my cup of tea. I like to be able to do other stuff in my day and not have to stare at a computer screen all day. So I set alerts and I look for trades around my key levels. And if we're not at one of my key levels, I'm not doing anything. And you'll find if you start to do this, trading becomes a lot less stressful. I mean, it's always going to be stressful because there's risk, right? You're risking money. You know, if you have a regular job, you're never really risking money to earn the money. You're just risking your time and opportunity costs that maybe you could be doing something elsewhere, which this is a whole nother conversation. But in trading, you're risking money to make more money. So it's always going to have, you know, a level of stress that most jobs, unless you're like an entrepreneur, don't really have. But again, personally, you know, I don't want to be stared at this chart all the time. I find that I overtrade if I start looking at the chart too much and I get too zoomed in. I'll just go crazy, right? Now that we have this volatility back, like you don't need to catch every move. There's multiple 10% days happening every week. So if you miss one, fuck it, who cares, right? We're talking about trading. So when we're talking about trading, the value of the underlying asset is almost irrelevant. I mean, obviously this is different with Bitcoin, and I'll explain why, but like if you're trading Euro USD, I mean, you don't really care what the value of Euro USD is, right? You just care about volatility. If I'm entering along, is it worth more than it was when I entered? And how much did it go up by? How many pips? You know, that's all that really matters. The value of Euro USD is irrelevant. And for Bitcoin, it's kind of the same, obviously not completely the same. But to me, whenever I talk to people about trading Bitcoin, I say, if you're a trader, right, at the end of the day, the value of Bitcoin is irrelevant. And I know some people, of course, it's relevant because it's increasing in value, you want more, of course. But it's irrelevant in that you just care about volatility, right? If you're in a short, you want to be able to get back in at a lower price than where you sold it, and vice versa for longs. That all that matters is having that volatility. And so if you miss a day, it doesn't really matter. Now, obviously, the caveat with Bitcoin is if we're in a bull market and Bitcoin is an appreciating asset, you do want to get more of it. Right? So it does matter what the price is, because let's say you were sitting there not doing anything and then the price of Bitcoin goes up and you weren't in a long, you're still making money on owning Bitcoin versus, you know, if we're in a bear market, obviously you want to be focusing on your USD gains, right? Because the value of Bitcoin is dropping. That's a different conversation. But the bottom line is, as a trader, you care about volatility. And in a bull market, the best, like as much as Bitcoin was great to short here, Bitcoin is the best asset in the world to long. Like a guy like Flood gets a lot of shit for longing only. Why wouldn't you want to long an asset that when you get it right, you get more of it, and the value of the asset has also increased? It's like a double win, right? So it's a great thing to long, especially when we're uptrending. And I love trading Bitcoin because it trends like a motherfucker. So I don't even know where I digressed from to get over to this conversation. But the bottom line is we have the volatility back that we've been so sorely missing, you know, during these times. And, you know, don't stress if you're missing trades, right? There's going to be so many opportunities as this, you know, run continues. Don't fucking worry about it. Mark your key levels, look for trades at those key levels, and don't worry about anything else. So we have another weekly order block here. And as you can see, this one, right, from here to here, we're basically trading within it right now. This one here actually stopped price almost to the dollar. We obviously wicked above, right? Cleared out this high, but then we closed back below. So that should have been bearish. After this candle, bearish, this candle failing to close through, this candle closing red obviously was the late sell signal, but I'll zoom in and show you some of the short signals I saw here before. Again, these are just key levels I'm looking at. These are the areas I want to be looking for trades, nowhere else. And then here, these are all the weekly levels I'm interested in. This is my buy the dip area right here. Between this level and this level here, this is where I'm most interested in buying Bitcoin again. To me, this seems like a logical place to pull back after this up move. This is clearly a high that is formed here. I like the idea of opening a big fat swing long here. I know some people who want to see Bitcoin go lower. I've seen some crazy shit. This level I like as well, this monthly up candle before the bottom was formed here. I like this as well, but I just personally don't think we'll get into the 6Ks again. I can be wrong. I'm totally okay being wrong. I have Bitcoin from I have people who are chirping me because I bought Bitcoin in November at like 5,500. Like, oh, it went to 3K. You're an idiot. It's like, well, I just bought more down here, and I bought more up here, and all of those buys are like at least 2x now. So fuck all of you. But I just don't see us coming all the way back down here again. We can. Anything is fucking possible. I didn't personally see us going to 13K. So we could go lower than I expect, but this is kind of my zone. If we do break below this kind of, area here, this is my zone where I'm like going heavily. Any spot that I sold up here, I'm looking to buy back here in a big way, as well as opening swing longs for another leg up. We could never get this low. We could go lower, but this is kind of my first area of serious interest for, bigly buying 8.7 down to about 7.7 essentially. $1,000 range. Obviously, don't bust your nut all in one go, but to me, I think we are going to see something like very rudimentary, but and then a move back up. That's my personal opinion. How long is that? This is obviously not true to scale in terms of time. We could chop sideways down here. We could do a whole lot of things, but I just don't really see Bitcoin going back to like 6K again. I could see it wicking down below this block, but then closing back within it on a high time frame basis. But I personally don't see us coming back here again. We could. And if I'm wrong, great. I'm going to be buying cheap Bitcoin. I have seen some crazy calls, people calling for like sub 5K. To me, that's just ludicrous. But again, this is Bitcoin. Anything can happen. I'm not ruling anything out. I just personally don't think it will go that low. To me, it just seems too easy to be like, oh yeah, 6K turns out it was the, super no-brainer buy, or 5K super no-brainer buy. Let's give you a chance to do it again. Just doesn't make sense to me. I think a lot of new participants and volume has come into the market on this run. So to me, it just doesn't make sense. I think people are already scared shitless, right? We've gone up 300% since here, right? Or 400%, whatever it is. And we're down 30% and people are calling for new lows already. Imagine how much worse it will get if we go sub 9K or something like that, right? So I think, the irrationality levels are still at an uber high. Every Discord I'm in is the exact same thing. At the 10K top, it was like, oh yeah, we're going to 6K again from here. This top, we're going to 6K. This top, we're going to 6K. So it's all the same to me. I don't think the sentiment has gotten any better. I think people are still retarded. So I just think if we get down here, people would be terrified, and a lot of people would puke their bags and whatever. There's going to be people who have amazing buys from down here who are going to puke at a 2x, thinking that it might go back down here. And to me, it's like, okay. So this is my kind of key area of interest, and hopefully that makes sense why. Let's zoom in again here. So what I'm going to do is this is the bottom of that weekly order block that I showed you there that we wicked above. I'm going to refine that level down to here, a little bit lower. But as you can see, almost caught the absolute low here, $4 off. This is a daily order block, right? So I like to look for blocks, pivots, order blocks, whatever you want to fucking call them, demand, supply zones near key levels. To me, that's when they're relevant. If they're not near a key level, to me, it's not a relevant level, or not a relevant, piece of price action that I care about. To me, trades happen at key levels, and I don't care about the in-between. So, right now, On the daily chart, I'm going to just zoom in once more here to the H12. So this is kind of how I keyed in my last trade here. And I shared this publicly on Twitter. I shared this one on Twitter. Right here, right? So we got a bounce, rejected the weekly level. We've now broken below support. I'll be looking to short a retest. So that's exactly what I did for this trade that I posted the results from this morning. I just waited for a retest of my level. We closed below my key support level, and I'll show you where I get that in a second here. And then we dumped. So that was a pretty standard setup for me. My key level here is actually the same level as the monthly open. Right? So if this is going to be a down month, what is that stuff I just talked about at the start of the video, right? If it's going to be a down month, would it not be pertinent to know where the monthly open is, right? And then any trading above, like this could be the high of July, right? All this trading above there. Before this monthly, before we even got into July, you had thoughts of this could be the top, right? And then as we got into July, we had a low, we had a lower high, right? There's your break in market structure. You could argue that we're now below the monthly open. This is the high for the month here that we've placed, and we're going to chop around and go down for the rest of the month, right? So it's pertinent to know where the monthly open is. And funnily enough, the monthly open coincides right with that 12-hour order block I had. And so basically my trade yesterday was watching, I believe it's this level here. I marked out this level here as kind of an SR level, right? Support, support. When we closed below it, confluence with us, being right at the monthly open, below this order block, this was just a no-brainer short for me. I put my stop, I executed this on the H4. So I put my stop at 11,300, which basically to me was loose. I mean, I could have put it like tighter, like here, 11,150. But to me, this is nice and loose. If we got to 11,300, which is, kind of up into this area, I thought we were going to be destined to go higher. So I'm happy with how the trade worked out, but it's pretty standard, right? I had my alerts set. I watched the daily close happen yesterday. It closed right below my SR level. We closed right below what also is going to be the equilibrium of this order block here. We were right at the monthly open level. It didn't seem like it was acting as support. So that was kind of my signal to get short, and I executed that short on the H4, right? And if you want to pull your fib from there to there, you'll get that ICT, OTE thing that you see people, post about. Right in the OTE, baby. The OTE, I get so many questions about this. What is this? Is it some magic sauce? No. This is just very standard retracement levels for price. When price is moving up in an uptrend or a downtrend, what you'll find is if you make a high and then a low and then it's an uptrend, what you'll often find is the distance that price retraces often is about 62 to 79% fib. So it's just a measuring tool. The fib to me is just a measuring tool and nothing else. It doesn't serve any magical purpose. So it can be, some people need to see it visually. They're like, okay, there's your 70% retracement. I'm going to long it. But to me, I've just been doing this long enough. I can just kind of see, I know that this is about a 70% retracement of this downswing, right? So that's how I determined this short. And right now, my bias on Bitcoin from a trading perspective is bearish. As long as we stay below the monthly open, and I'm just going to round up to 11K, unless we get a daily close above 11K, any bounce is for shorting in my opinion. So if you're zooming in here, where could we bounce to? I mean, I don't really see any levels I love here on the H4, so I'm not going to personally be probably taking a trade. I could see this being a level that we short to, again, from here to here. this would be about 70%, right? Boom, just like right there, right? So I could see that happening. That'd be a pretty nasty squeeze. But right now, I don't see anything above the on the H4 that I like. I do like these lows here, maybe coming up and retesting these lows, you know, maybe coming up and retesting some of this inefficiency, right? You could pull a fib from here to here, and the 50% would be, you know, there you go, within 50 bucks of that level. Would be not a bad place. You know, I don't know if we'll get that high though. We could just run these highs here, kind of to the 9-8 level, and then dump again. But I wouldn't be surprised to see some sideways here, some chop before potentially another leg down. But until we get a high time frame close above like 11K, any sort of bounce I'm looking to short. And for me, I want to see something form on the H4. So I would need to see some more price action form before I kind of make a decision on what I want to do. Where are my downside objectives, right? We're coming right into that daily order block that I mentioned here, right into here, finding some support. So I wouldn't be surprised to see some relief before, you know, continuation down. You could argue that this is a bearish daily order block. You can't argue it. It's a fact. This is a new bearish daily order block, the up candle before the down move. So we could look for a short coming up into here, something like that, right? And then I'd be targeting down here. Let's see how that looks on the lower time frame. Looks pretty nice, right? Coming right back into those lows that I was talking about the 50% of this inefficiency. So that's something I could see as a potential short coming up as the next move. That would squeeze a bunch of people's heads, getting back above 10K. But I'm not rushing it. I just had a good trade, so you know I'm pretty happy with that. I'm going to wait and let some price action develop. Anytime there's any sort of kind of expansive move or big move, you know, we've got a bearish engulfing candle here today that just closed. I like to sit back and let price action develop a little bit instead of trying to just jump into the next trade. Like I know a lot of people that caught a short here and they're going to instantly try and flip long and ride it back up. That's not how I trade, but you know, do what you do. So that's kind of my plan now. Let's see where this bounces to, and I'm shorting bounces, right? We have clear bearish market structure, a high, a low, a lower high, a lower low. The next lower high, whether it's from here to here, I think would be a money short. I think that's pretty clear as invalidation as well, right? Let's see if I can work trading view. Apparently not. Hold on. Watch this. Some sort of move up here, right? And then you either short it for the next leg down. If we can reclaim here, I think you can buy a retest. Play it long, and this goes, oh, so up or down, or you can yeah, it's how trading works, you fucking dickhead. You have an invalidation, right? So if you short here, your invalidation is getting above this level. So maybe at, I don't know, 11.1, right? We get a daily close through this level, your short gets stopped out, but now you can hop in a long on a retest, right? So you can try to short it, and if you're wrong, you can still get on the long train. It's not like you're completely fucked, and if you get a trade wrong, you can't hop in another trade the other direction. And the same goes for the downside. So I posted in my Discord yesterday 2 potential short options. I said, I'm going to take a short here. I was like, I'm going to take this short here. But if this gets stopped out, right, I'm going to try and short again here. And the reason why I can get stopped out and hop in another trade, whether it be in the other direction or the same direction, is because you aim for asymmetric risk reward, right? So reward to risk, whatever the fuck you want to call it, right? So if I'm aiming for a 2-to-1, look at that, beautiful, beautiful, beautiful. If I'm aiming for a 2-to-1 and I get stopped out, I'm down 1R. But then if I get the next trade correct and it's a 2-to-1, I'm up 1R, right? So when you aim for asymmetric risk reward, meaning that the risk and the reward are not the same, right? You always want to aim for those like 1.5 to 1, reward to risk we're talking now, 2-to-1, 3-to-1. It allows you to be wrong because the winners are always bigger than the losers, right? You cut the losers and the winners are bigger. They make up for the losses. That's why you don't need to have a strike rate above even 50% to be profitable. You can have, you know, I believe on 2-to-1, your strike rate can be 33%. That might be 3-to-1, but you know, to break even, like you don't have to. you can get a lot wrong. So that gives you the flexibility to do things like this, to be like, hey, you know what, if we come up here, I'm going to try short, because if I'm right, you know, it's a 4R trade. But if I'm wrong, I'm down 1R, and then I'm going to hop in a long that could potentially be a 3R trade in the other direction, right? And it makes up for that loss. So that would be kind of my plan. I would say, where's this bounce go? It could not come this high at all. Be very clear about that. It could come way less, and it could just leg down from here after chopping around. But this is kind of what I'm looking for now, until more price action develops, is a move back here. And then I want to see bearish signs on the lower time frames, right? So if my execution time frame is the 4-hour, I want to see maybe price rounding off into a lower high. You know, on the even more zoomed in, I want to see bearish market structure, right? On the H1, I want to see price make, you know, a lower high and then a lower low, right? On the H1, that's bearish market structure starting to form, right? Market structure will shift on the lower time frame first and give you an indication as to what you can expect on the higher time frame, right? So this is the kind of thing I'd want to see happening on the low time frame here, right? A rounding off, a topping form, you know, maybe something like, this is one of my favorite setups, right? Is a high, right? And then a lower high, and then you have your clear level here, right? Where it's like, okay, now you get the fuck short for sure, because this was obviously just a run above high. This is, what do you want, call it a Quasimodo, inverse head and shoulders, over under, UB retest, whatever the fuck you want to call it, right? So that's the kind of shit I want to see here. If we do bounce all the way up here, I want to see that kind of shit form, and that would give me, you know, the confirmation I want to, with my stop probably above this swing high, to get into a short, targeting the next leg down. I like to enter live. I don't really set limit orders that often, unless it's for like spot buys or stops, obviously. But I like to enter live, so I like to enter on when the candle closes and my setup is confirmed. That's generally how I enter, and that's the kind of shit I want to see. Low time frame to get me into the trade. Of course, if we start bouncing here and you can layer limit orders, you know, throughout here with your stop here, whatever you want to do, right? If we get that high time frame close through here, that would lead me to believe that we're going to have, you know, potentially another leg up. So from a trading perspective, leaning bearish, looking to short bounces, you know, finding some support in this consolidation that led to this move up, not surprising, right? You know, you could fuck just an order block. You don't have to pick one candle. You could just say, hey, this entire down move that led to this up move is significant to me. Whatever. You know, and then we get into this weekly block territory where I'm looking to build, you know, because look at this consolidation. Even if I want to extend this, right, we had this clear consolidation here, you know, that led to this huge blow off the top move. So even if we don't, like, even if we are going to lose these levels, we're going to bounce here, right? Like, let's say I'm wrong and we come in here, you know, and then we come up and then we break it and we go down further. Let's say I'm wrong. Bottom line is, this is a high time frame zone. This is a weekly block, weekly demand. That's a high probability area that a bounce is going to come from, and a big one at that. So I want to be looking for longs there. I have reason to be bullish here. So in here, I'm going to be looking for bullish setups. So that was a lot of talking without any sort of reviewing. Hopefully my audio's been working this entire time. Let me go to the chat here, see who is still following along, if anyone. All right, Jesus. Okay. What's happening, Astros? You can have a piece of pizza, Mr. Panda. Mike Moombach. Do you think new till all-time high this year or not till closer to having? I mean, I'm not really one to kind of make predictions like we're going to see a new all-time high this year. If Bitcoin keeps following the gold fractal, which I believe it is, and if you want to learn more about that, you know, go follow Kazanomics or like DJ Thistle. Those guys are the fractal G's, and these are the guys that spotted the gold fractal before everyone else. So the gold fractal, right, Bitcoin's bottom looked a lot like this bottom, and that's what the gold fractal, this is what they're talking about, the bottom of the gold in the early 2000s, late 90s that led to the bull run. This looked a lot like BTC's bottom to me as well. And if it follows the gold fractal, this bitch just marches the fuck up. So the real question is it's parabolic, right? Are we here, right? Or are we here, right? So to me, I think we're just experiencing one of the many, because there's going to be more pullbacks, as we march towards all-time highs. And if this continues to follow the gold fractal, I am definitely expecting new all-time highs sooner than later. Whether or not that's going to be this year, I don't know, right? Like timing is hard to predict in these instances, but I do think it's possible, but I'm not like guaranteeing it or anything like that. But like if we regain the 2018 yearly open this year, I fully expect new all-time highs this year. So hopefully that kind of answers your question in a runaround manner. Thoughts on ZRX, XMR if you can. I'll come back and just do all of these charts for you guys once I read through all this. Shout out to the Suicide Naruto runners. You are the front line. Yeah, so I mean, Michael, I'm not here to advise you on what to do, but I just showed you where I'm looking to buy back my spot, and it's between 7.6K to 8.7K. So 8.3 sounds like a pretty nice area to me. Cunt 400, booyah boy. All right, Stuff Poker, yo, what's happening, bro? Yuck. Sup, Mayne? Shabazz, what's happening, bro? BTT, when M1 open? When Tick 100 open? Trader Goo, I'm not some crazy degenerate fiend like you looking at the tiny charts. I don't know who the fuck this guy is. I think he's memeing. You know what? If you're talking to my dad, ask him what's for dinner tonight, because I'm hungry. Accumulation, distribution. Sup, man? What's happening, Ben? Good to see you, buddy. Thanks for your videos and your work. Thank you. You're welcome. Also Confluent. I dropped out. My dad wasn't happy. Sent me a DAX scam for a few weeks. Jesus Christ. I love you, IC Dante. XRP analysis. I will do XRP. Yeah, I will post this on YouTube, Dennis, so don't worry. Would you be bearish long term if we broke that weekly OB, since that'd be a lower low on the weekly? I mean, yeah, I would. I wouldn't say I'm bearish long term, because I'm bullish on Bitcoin to go through all-time high. That said, I'm an astute investor in that if Bitcoin went to zero tomorrow, for whatever reason, it got deleted from the internet, boop, delete, it's gone. I wouldn't be wrecked, I mean, I would be upset and I would have lost a lot of money and I wouldn't be stoked, but it's not like I couldn't pay my rent, or feed myself or do the things that I want to do, because I have a calculated portion of my net worth in crypto, and it's an amount that I am willing to go to zero. It's a lot for me, and just in general, I think it's a lot, but it's like not like if it went to zero, I'm fucked. So I don't think it would be great to see Bitcoin make a lower low. Like I think market structure wise, anything lower than here starts getting a little shady, and maybe we are going to dribble down and test the 6K levels again. But I just personally don't think that's going to happen. But it's not going to shake me out from a long-term perspective. But I would probably take a hit on some of my spot buys that I'm holding from. Adding. I bought a lot of spot at 7,500 before I went to Europe. Like one of the best things I did, and a testament to zooming the fuck out, is I bought a bunch of spot at 7,500 and opened a low leverage long, and I pretty much doubled my money while checking the chart once a day in Europe. And it was just nice, right? I was just zoomed out. I looked at the daily chart, the 12-hour, the weekly, that was it. And I made more money than I probably would have trying to fucking trade it. So something to be said about zooming out, right? But yeah, long term, no. But short term, in terms of the next, kind of 6 to 12 months, probably. What's your perception on alts? Can you please analyze TRX? So, I mean, all of you guys trading alts, I imagine, you guys are holding bags. I don't really touch alts. It's not really my thing. I usually get wrecked when I try and trade alts, especially when Bitcoin is trending super hard. Like the dominance of Bitcoin is so high, right? All of these altcoins, guys, Bitcoin dominance Bitcoin is the denominator of all these altcoins, right? So when Bitcoin is fucking raging, these alts get smashed. And when Bitcoin dominance is high, alts get smashed. And as you can see right now, for the most part, whether Bitcoin goes up or down, alts are getting smashed. So in my opinion, alts are at or near the bottom, or they have like, you know, double-digit percentages to go down still. I'm not interested in buying the bottom on alts and trying to catch that knife. You know, I've fucked up and done that before. Be like, oh, this is the bottom for F, and it drops another 40%. I would much rather wait for them to regain high time frame levels, right? Like as much as I want to, you know, this is me trying to catch the bottom of F. It worked here, it worked here, it did not work here. But you know, to me on F, I would rather just wait, right, for it to reclaim this area. Okay, if it reclaims here, I think it's bottomed, right? So why try and guess down here? Because it could fall more. I mean, Binance doesn't even have lows past here, but it could fall more. So who knows, right? But if it reclaims kind of 0.25, 0.26, it's bottom. So why not just wait for confirmation? That's how I would play most alts, not try and guess the bottom and just buy on confirmation. Because if this thing is going to go on a rip again, do I really care if I miss the first, you know, couple percent, right? So let's say this was the bottom. Okay, so there's a 30% move back to where I'm going to buy. Do I really care if I miss the first 30% of a, you know, 300% move? Not really. So I would rather wait. And that was my same thesis for buying here, right? I bought in here on this little update, and I got so much shit for it. And people were like, oh, you're wrecked, like, fuck you. And I was like, okay, but like, you know what? Yes, it went down like another 30%, 40%. But if I would have just had bought there, even to now, I'm up, you know, 70, 80%. At one point, I was up well over 100%. Like, catching the bottom on F would be legendary, sure. But are you going to have the balls to go in huge size, not knowing in the bottom, and it could go down another 30, 40%? Or would you have more confidence going in huge size when it's clearly reclaimed key SR? And if F is going to 0.12 and you bought at 0.026, you're a fucking legend. So who cares, right? Like, that's my thoughts on alts. So I don't really like touching alts, especially when Bitcoin is just crushing the entire market. It's like, why would you trade alts, which mainly just go down? 99% of alts, 99% of their life go just down. So you only are trading in one direction. And if you're trying to long it, you're just trading on such a small part of their life where they go up. Better off just trading Bitcoin, right? Just better off trading Bitcoin. The real money is made in margin trading Bitcoin, not trying to catch 1,000x. Because the coin that goes 1,000x, there's no way you got 10 Bitcoins into it, 5 Bitcoins into it. You got like 0.1. And yeah, obviously it's sweet, but what about all the ones that didn't go 1,000x, right? So most people don't realize this. They just focus on the winners, not the risk. And that's the wrong way to think about trading. You should think about what is the most you can lose. Yeah, I mean, no, it's not crazy. I mean, the CME gaps tend to get filled, but they don't have to get filled. So all those people who are like, oh, CME gaps have to get filled, I think are idiots. And all the people trolling the people being like, oh, yeah, your CME gaps never going to get filled. I saw people making troll posts about being like, oh, CME gaps never going to get, and then they kept getting filled, right? And then all those tweets got deleted mysteriously, right? So, it's one of those things that, you know, I think their gaps like to get filled. You go to the Forex market, same thing, but they don't have to be filled. So I don't think of it as like, oh, we have to come back here because there's a gap. But gaps like to get filled, and if price action is near it, there's a good chance it will get filled. Can you go over the origin of your name? Where did Mayne come from? Mayne came from Gucci Mane, a rapper that I like. I'm very white. You know, going through middle school and high school, I would always listen to like gangster rap music, and this was in, you know, the early 2000s because I'm old, and I would listen to, you know, guys like Gucci Mane and stuff, and, you know, me and my friends would call each other Mayne, so I became Crypto Mayne when I first came on to Twitter, and I didn't want to pigeonhole myself to just crypto, so I changed it to Trader Mayne. I know Gucci Mane is spelled differently, but the proper way was taken. can you help with the dominance chart? So, I mean, hopefully I just explained the dominance chart a little bit to you. What's it? BTCD dot D, right? I mean, this looks like it's going to go up more. So, you know what I mean? Like, this looks like a bottom is formed, right? Like, if you flip this on its head, do you want to long this or short it? I want to fucking short it, right? So I want to short, you know, whatever move breaks below here, meaning more Bitcoin dominance, meaning more alts getting smashed. So, you know, it's obviously at support here. Remember, this is the inverse chart. So support means dominance might go down. So we might see some relief for alts, but if it gets below here, it's fucked. So that's why I'd be very careful with alts. And Bitcoin dominance, you know, means, and what people need to understand, right, is alts are denominated against Bitcoin. It's a fraction, right? So there's a correlation there. So the stronger Bitcoin is, right, the more likely your alts are getting fucked, because your alt might be hanging steady via USD, but your alt via Bitcoin, right? What is the strength of Ethereum versus Bitcoin? Pretty fucking weak right now, right? So, you know, it's a fraction. You guys got to know that. A lot of people don't realize that. It's like when you're trading BTC, you're trading ETH relative to Bitcoin. And so the value of Bitcoin matters when you're trading ETH versus Bitcoin. And that's true for all alts. And so when you see that Bitcoin dominance being very high, it means Bitcoin is very strong. It's the denominator. What happens when the denominator of a fraction, let's say you have 2/5, right? What happens if this goes up to 3, like ETH is getting stronger, but this has gone to 9, right? Probably a bad example because it's still pretty close. This is 40% only, right? But this is 33 1/3, right? So it gets weaker, right? When the denominator is increasing, the value of the fraction decreases, right? So that's like math, whatever, 101. Perfect. I don't know what you're laughing at, but I must have said something funny. 2 and 1 is 33%. Yay. You're welcome, Bob Cotillion. So on the bearish mitigation breaker EQ, does that help to wick the body of the candle close on the yearly open? You're going to have to ask that question again. I don't understand. Legend is another name for market structure, Elliott wave. I would say yes. I've done an entire video rant about this, and my homie here, Bromigo, can attest. To me, it's like, what are patterns? What is Elliott wave? It's just market structure, right? Like, if you understand that this is an uptrend, right? And maybe, you know, this is just a false break, but this is still a higher low, right? You've got your higher highs. This is an uptrend. I don't need to know that this is the A wave, and then the B wave, and then the C wave, and then this is your XYZ correction. I don't need to know any fucking that. It's just market structure, right? And then it's just determining, well, okay, if we've made a higher low here, well, where does the next wave need to go to maintain its Elliott waveform or its structure? Well, it's got to make a higher high. If it's an uptrend, I don't need fucking Elliott wave to tell me that. And it's no different than with patterns, right? Like, so people are like, okay, well, this is called, you know, an inverse, you know, head and shoulders pattern, right? And here's your neckline. It's like, to me, this is just, forget all of this shit here. This is just a low, a high, a higher low, and then if we break the neckline or this high, we now have an uptrend, right? So everything can be simplified, and everything can also be overcomplicated to make it seem like it's more than it is. I think the 99% of your trading shit can be simplified just to support and resistance. So understanding, you know, where support is and what to do when price gets there, right? What are you doing now? You have a break of support and a retest. You've also got a low, a high, and a potential higher low. That's confluence for a high probability long, right? All of that shit, like, that's trading. TA, people are mistaken. Like, the problem with crypto Twitter is people want to have a big account and they want to get a lot of likes and engagement. It gives them that dopamine dump that they need. And everyone, like, I started posting. I think part of the reason my shit blew up is because I had just clean looking charts. Even if you go back, some of the colors I chose were hideous. But I wasn't very good at the aesthetic thing. I just went black and white because I'm like, whatever. Then guys like Hasaka, who I love, I'm not trying to shit talk Hasaka at all. He came up with these really clean looking charts. And then you see all of these clones who have these clean looking charts with these cool color schemes. And they're like, oh, look at this. And it perfectly retested the OTE and the pip of this bullish order block, and then it went off, and you could have made 7% if you entered here with your stop here, and it's a 20-yard trade. It's like, all of that is fine and dandy in your chart, but like, did you trade it? Right? Because I don't care what your fucking chart looks like. Some of the best traders I know and I talk to on a daily basis who are trading crazy fucking size, making crazy returns, have hideous looking charts. Charts that I'm like appalled by, and I'd be like, my OCD is an overload here, and I think this is gross, but it works for them, and they're traders. What your chart looks like, no matter how clean and precise it looks, it doesn't mean shit. The hard part of trading is not TA. TA is easy. I can teach a person with no knowledge of the markets how to mark up a chart relatively quickly. What the hard part about trading is execution. So, okay, when all of these things line up, right, you have your setup here, right, and then maybe it's like, okay, like, are you actually longing here? Do you have the balls to step in? Do you have your risk calculated properly so that with your stop here, you're only losing 2%? And then can you manage the trade once it goes in? Like, what if it goes into drawdown for a bit? Are you freaking out, right? Trade management shit, and then it chops around, and then it goes to target. Are you actually executing the trade? Are you managing it? Can you handle the psychological aspects of trading in terms of being underwater, being up, not cutting it before your target or cutting it before your stop? Trade management, execution, psychology. That's the hard part of trading. Execution more than anything. Like, it's so easy to look in hindsight and be like, okay, well, you clearly should have, like here. So I actually took this trade, but then I fucking closed it for a loss. But it just goes to show, right? Like, it's execution is insanely hard. So I had this level marked, and I actually took this trade here with my stop here. I would have longed like the almost bottom, okay? I took this trade, and then I closed it here, even though my stop was there. But I think I'm trying to remember, this is months ago now, but I believe I had just too much size on, and I thought we were kind of dribbling down. I thought we were going to go lower. But I had the logic to take the trade, and the proper trade management is I'm wrong here. So if I'm exiting at any price before here, why did I take the trade in the first place? Clearly I was not confident enough in the idea to take it, so I shouldn't have taken it in the first place. If you're confident in your trade and you know where your stop is, if you exit that trade anywhere other than at your profit level or at your stop, you shouldn't have taken the trade in the first place because you didn't believe in it at the start. So why are you throwing the money behind it in the first place? So if you can believe it, and I have the fucking the entries to prove, I longed here and I exited here for a loss, right? I ended up re-longing at like 4,100, but like, that's fucking mental because I didn't follow my plan and I didn't execute. So it's fine and dandy to be like, oh, in hindsight, yeah, you should have longed here. It's a no-brainer long, riding this bitch up to 13K, and you obviously should have closed it here because it's obvious. Right? All of that shit goes out the window, the hindsight shit, when you're doing it live with real money and it's your money on the line and it's happening in real time. All of that shit changes, and all of a sudden, when this happens, right, maybe you're long from here, this happens, in hindsight, oh, that was just a stop run, filling the CME gap, it closed back above the level, you just hold, or you add. But when this happens live, you're shitting your pants, right? Especially if you don't know what you're doing, you're shitting your pants. And usually the time when you're shitting your pants and price is going down, that's usually the best long, right? Being terrified, thinking this is going to 1K, turned out to be the best long, right? But all that shit changes when you do it for real and you actually are trading and not just charting. And so the problem with CT is all these people want to have these pretty charts, get lots of followers and likes. That's not making you any fucking money, right? What makes you money is actually executing trading. The TA part of trading is easy. So whenever I see people talk to me about all of this fucking shit, TA to me is very simple. The hard part of trading is execution, trade management, handling your psychology, understanding risk management. That's the hard part, not the TA. So when you see all these chart artists here posting shit in hindsight and all that stuff, just keep that in the back of your head, right? Like you can learn to draw your charts really pretty. You want a secret? Make your charts black and white, mark out order blocks and clear horizontal levels, and then when price reacts to your level, just post a chart from before, and then when it reacts to your level, post a chart from after, and boom, you look like a wizard, right? But did you actually short here, or did you say, hey, see, reacted from my level, or did you actually take the fucking trade, right? Two very different things. I'm just ranting at this point. That accent, lol. Mayne is hella Canadian. I am hella Canadian. I am from a fucking small ass town in the interior of British Columbia, Canada. I grew up on a fucking farm, and yeah, Canadian as fuck, I guess you could say. Am I related to the Queen? No, but she's on all my money. I'd like to be related to Meghan Markle. I mean, like as in fucking her and married to her. She's super hot. All the same shit. Chris, higher highs, higher lows, and uptrend, lows, blah, blah, blah. Exactly. Jesus Christ, you guys are talking today. All right. I think we're going to get 837 faster than anyone thinks. Sure. Came here for the fib spiral. Huge sauce. Talk about Libra. I have no comment on Libra. I don't know if it's going to be good. I don't know if it's going to be bad. I don't really trust Facebook. I don't use my Facebook anymore because I don't trust Mark Zuckerberg. I think he's a robot. But if you need proof, just go watch that speech where he's talking to Senate, and it looks like someone's like typing in commands like drink water, smile, drink water again. Like he looks like a fucking robot or a lizard person. I don't know. I don't trust Facebook, so fuck it. I feel like it kind of defeats the whole purpose of crypto, right? Like being anon online and shit, and not letting the government know. It's like, well, who has the most data in the fucking world? Google, Facebook, etc. Someone who traded Elliott Wave, ICT, style PA, and other PA, it's not even remotely the same thing. Sorry, we can't hear you. Talk about alts. Great stuff. Thoughts on alts. Hopefully I explained that to everyone. I wouldn't be surprised if we go below 8,800. People forget to zoom out. You always miss out. I forget how simple and clean you keep trading. Been a while. Always bring the sauce. Thanks, Jeffrey. I appreciate that. Kazanomics, LTC Winter. Kazanomics was one of my first mentors. He's the first guy that got me into kind of like trading properly. Before I met Kazanomics, I was just on Twitter buying what Fontaz and Angelo and Kobe and all the shit pump and dumps that those guys were running. I was just buying whatever they fucking said. Kazanomics showed me the light, and then I kind of went on my own path after that. Nothing but respect for the guy. I do not understand why he gets so much hate. He is literally an insanely accurate trader. People are like, oh, well, he's toxic. His personality is this. It's like, well, fucking don't listen to him then, right? Like, it's a free fucking country. Anyways, I'm not going to go down that rabbit hole, but I think he's a great trader. And at the very least, if you don't want to deal with him for whatever reasons you have, go read his fucking blog. It's incredible. Who cares about the halving event? Gold has a finite supply, just like Bitcoin. Trump tweets, good or bad? I think Trump is hilarious. Being from Canada, that's a lot easier to say. I think he's hilarious. What he says about Bitcoin, I think, has little to no effect, in my opinion. Thoughts on alts? Hopefully I've answered that already. Hope everything's good. Yeah, sorry about saying there's an emergency. I think that came off wrong. You used the word emergency, I guess, too lightly. My little brother, crazy to say he's little, he's 20 now, but his girlfriend, who he was so in love with, cheated on him, and he dumped her, and he was freaking out, and he just needed to call me and talk, so I had to talk him off the ledge, the good old days, being young and in love and not realizing that there's infinite vagina out there, and don't fucking get hung up on some hoe. Once a hoe, always a hoe. You can't turn a hoe into a housewife. Miss your streams, man. Thanks, Rookie. I miss you. Are you not concerned about Tether at all? Not in the slightest. I don't really care about that FUD fundamental shit. I just trade the chart. This chart looks like something I want to be, I mean, not right now. This is something I want to short. But to me, I just trade the chart. I don't focus on anything else. People will try and fit narratives, news events, Bitfinex, Tether FUD, Trump tweets to price. Generally, what I find is everything you need to know is already in price, and anything that happens after the fact, it's very easy after a move has happened to be like, well, this news event happened and this move happened, so therefore they are correlated. I just think that's dumb. I just focus on price, not anything else. I like to keep it pretty simple. For FX, obviously there's news events that affect price. I believe that a lot of these things you can kind of see in advance sometimes in price, but for the most part, if there's a high impact news event in FX, I just don't trade when that's happening. Dominance, some thoughts. Hopefully I covered that already. You the man, much appreciated. Thanks, bro. I'm making main gains on MEX by just trading SR and tight money management. That's what it's all about, buddy. Support and resistance, good risk management, fucking banger. What's the lowest time frame you'll go in order to refine your entries and exits? I will go down to the hourly, right? Like if you want to talk about this last trade that I took here. So on the hourly, let's say I didn't get in here, but here we have basically an over-under, right? You have a low here, went under the level, retest. So that could have been to refine your entry, right? And once you saw this wick above here, come back down. Where did we retest? We retested this order block here and your SR level. You could have put your stop here. That's how you get a way higher R trade, right? You want to get a fucking banger of an R trade, you got to zoom in more, right? And you got to have a tighter stop. So you could have done something like that. My stop was quite loose, right? It was up here. But you could have been like, okay, clearly this is going down, right? So, I mean, here's so many reasons why this is going down, right? So I took the trade on the H4, but on the hourly, right, you get so much more detail. What do you have here? You have a stop run. This is swing failure pattern, okay? You have a low, a high, you have a lower low. There's a bearish break in market structure. What are you doing now? Swing failure pattern, bearish break in market structure. You're looking to sell any bounce. So here's a bounce right into your bearish order block. Boom, your stop is defined right above there. If this thing is going to go down, it should not come back for these wicks. So that's how you could have gotten a tighter entry. You also could have entered on this, right? Mitigation right here. Move up, we lose that level, your retest is your sell, your stop again could have been right above this mitigation level. That would have been a tight little trade. So I've been known to go down to the hourly, but anytime I get below there, once I'm like fucking around on the 15-minute chart and stuff, I end up getting fucked more often than not. Like my strike rate on the high time frame is so much higher than the low time frame. I use edge wonk and it will track this shit for you. It will say trades executed on this time frame versus this time frame and these ideas. You can get all of this data and just the data doesn't lie, right? The numbers don't lie. Like once I start getting on the low time frame, my biggest problem is I start forgetting the high time frame context. Like, hey, we're going down. And I might be like, oh, well, this kind of looks potentially bullish here, right? Or I'm not saying this particularly does, but let's say I see some setup. I'm like, oh, I'm going to long it, and then it just gets smacked down. And then I forget that we're in a high time frame downtrend and short to the higher probability move, right? So that's why I don't really like to fuck around on the too low of time frame, because I end up losing that high time frame directional bias. And just the numbers don't lie. I'm just not as good at trading on the low time frame. I'm sure if I put my mind to it and focused on it more, I could be better. But again, I know my edge and I play to it. Yeah, my dad has been known to be a compulsive liar as well. So $100 BTC might never happen. Can you manage my funds? Absolutely not. DM me though on the low. I'm just kidding. Absolutely don't DM me. I will not manage your money or anyone's money or give any sort of financial advice, not only because it's illegal as fuck, but because it just completely changes the game. If you have someone else's money on the line, whether it's your friends, your family, someone you've illegally made a deal with to manage their funds, because I know for goddamn certain none of you fuckers are financial advisors with your Series 7. It just adds pressure. Whether or not you want to believe it, subconsciously, you're managing someone else's money. If I lose $1,000 on a trade, I was ready to lose $1,000. But mentally, if that's $1,000 is someone else's, I might subconsciously not do something I'd normally do out of fear of losing someone else's money. It just changes the game. It's added psychological stress and pressure. Trading is stressful and pressure cooked enough. You don't need to add anything else. Any thoughts on the low time frame equal lows, M1 to M30? My God, I'm not going to the M1, you son of a bitch. What's the low here? There you go. Your liquidity has been engineered. Those equal lows are right for the taking. I mean, I'm expecting another leg down, and it has nothing to do with those equal lows. This looks like shit, right? So whether it bounces and then goes down or just rolls over from here, I'm expecting more downside. The whole equal lows, equal highs, liquidity memes. Most people have no idea how liquidity moves in this market. There's not stops above every swing high, and there's not fucking liquidity under every equal low or above every equal high. So get that fucking nonsense out of your head. So my spot buyings, Mike, majorly is like 90 to 95% Bitcoin, and then about 5 to 10% Ethereum and XRP, and then I'll have like 1 to 2% of like a fucking Moonbet, whatever adds up to 100, like a very small percentage of like stellar lumens, shit like that, where I'm just like, I think this is still going to be around next bull run, so eventually it will get a pump. But for the most part, I'm only in Bitcoin, and then a little bit of ETH, and then a tiny bit of XRP for spot, obviously because they have tremendous upside. But again, right, the risk is greater. ETH went from fucking 360 to fucking $200 in like 4 days, 5 days. So the difference between a Quasimodo, and this is someone who studies this stuff more than me might want to correct me, right? My understanding is a Quasimodo, it's not a Quasimodo until, right, this high has to get closed above, and then the retest of the level is a buy. So it's a confirmed Quasimodo when the high that led to the move below the level gets closed above, that confirms the Quasimodo, and then the retest is the buy. Whereas an over under or a UB retest is just simply you have support, it's lost, and then it's regained, right? This would not be a Quasimodo because it never closed above this high before retesting here. Someone who you can check into with this is Trader Matt, technical anal, friend of mine. ACX Trades is another guy who uses this pattern all the time. Young Tilapa, he also trades with that pattern. So those are the guys I would ask. Like this, technically, I believe, would be a Quasimodo, right? Because you have your touch, break above, close below this level. Now it's a retouch. I bet you this is going to shit the bed right now. This is a Quasimodo, I believe, because it closed above there. Now it's retested. That's your sell. And then let's see. Grabbing BTT hot and MFT at 1 sat. I mean, can it go lower than 1 sat, right? Like, fuck. Seems like a no-brainer. What about library coin? It's the future? No, libraries on the blockchain. Something I seem to say. Library coin is just a fucking altcoin that I held from. That I'm down so much on it. It would have to do like a fucking 3,000% for me just to get to break even. The good news is I don't have a lot of money in there. You gave me an entirely new outlook on messaging around with alts as a newbie with this stream. All right, glad to hear. East Atlanta Santa, Gucci Mayne, the one and only. Gucci Mayne, Waka Flocka Flame. I love the live stream, man. We'll share a video to all my friends who just started trading. You did a very good job at the beginning explaining the open and close candle. Thank you, Michael. I appreciate that. Can you talk a little bit about how you go about your BCC holder strategy? Thanks, Mayne. You're the man. So I'm going to end the video now. I'm going to answer all of these questions, but then that's going to be the end of the video. So my holder strategy for Bitcoin is very simple, right? I'm looking to buy on any sort of major pullbacks on the way up. I will definitely sell some at new all-time high, and then I will sell some at predetermined increments. I had Bitcoin at like 5 or 6K before this last all-time high. I sold some Bitcoin at 10K. I sold some at 13K, 15K, 17K. I didn't manage to sell any at 20, but I sold the rest around 17 to like 15 on this second kind of leg up before death. So that's going to be my plan going forward. How high is the next all-time high? I have no idea, but the chances of you buying the bottom are just as slim as the chance of you buying the absolute top, right? So they're selling the absolute top. So I'll sell Bitcoin at predetermined levels, and probably in $5,000 to $10,000 increments in terms of that. 20K, I'll sell some, probably 30K, 35K, 40K, 45K, things like that. And chances are I may not sell the top or even that close to the top, but I'll have made a bunch of money, and I'll have sold. And just like if you sold Bitcoin at 13K, let's say on the way up, for a few weeks you're upset because it's above 13K, but then for the next 2 years you're stoked because it was way below 13K. You know what I mean? And I expect the same thing to happen. So however high it goes, even if you don't catch the absolute top, it's going to go way lower and you're not going to have to worry too much. So that's kind of how I do it, and you just live with it. When you're defining levels, do you include wicks at all? So the open, high, low, and close of a candle matters, right? Like I want to know, I don't necessarily usually mark SR levels with the wicks, right? But I do want to know where the high of last week was, right? This is a perfect example, right? Right? You want to know where this is, because what you can see now, if I zoom in here on this level, let's just assume that's the high of the week. That's the high of the week. So then when I'm looking at intraday price action, I go, well, shit, we just traded above last week's high and now we're back below it. There's a good chance we were just running this high and now we're going to go down, right? So it does matter where the highs and lows are as well. So again, lots to learn there, but there's tons of resources online. I have tons of videos, cred, stuff like that. You can join the Bitcoin trade group where I spend a lot of time. We teach all of this kind of stuff. Yeah, TRX BTC probably looks like hot garbage. I don't even need to pull it up. Look at that. I don't even remember marking this, right? So I think I caught a long here, right? There's your bullish order block retest. I caught a long. This is where I look like perfectly took profit there, got back below, retest that level, which is basically my entry, my invalidation, also with support resistance, boom. So yeah, looks like hot garbage. I remember I flipped this, but yeah, funny how nice those levels worked out. I haven't even touched this in ages. Last time I looked at alts was in June, just to give you an idea. Not really 1980. I mean, occasionally I'll consider what funding is and things like that. But for the most part, I just focus on the chart. I don't look at order flow. I don't look at volume. I don't look at any of that shit. I don't look at news events. I just focus on the chart because the chart, everything is in price, right? Everything you need to know about orders are in the volume is in the candle, right? The volume is in the candle. So I know that the majority of the volume is traded here, not at the wicks, right? So I don't need to throw a volume profile to find out that the majority of this candle's trading was in this fucking area here, right? So everything you need to know, in my opinion, is in the chart, and I can have invalidation levels, levels of support, levels where my ideas are right or wrong. And if someone's like, well, the order flow told you this, or the news would have told you this, like whatever. My stop was here because of this technical reason, and that's it. I consider myself a true technical trader. I don't look at anything other than the charts. Yeah, there you go. I mean, if you want to try and short alt, by all means, fucking give her shit. We out here, homie, you bet. I'm glad to hear. There's tons of people who post hindsight. I don't know who this guy is. Let's look him up. Am I about to roast some guy live on stream? I follow him. He doesn't follow me. Piece of shit. Unfollow immediately. Yeah, I mean, I don't know how to tell if this guy's, I mean, this doesn't look like hindsight to me. I mean, he's posting the fucking RR tool for you. So, I don't know. I don't know this guy. I followed him, I guess. So, looks like he had the right idea here. It looks like he's posted some gum shit. I mean, the one issue I have with him is he's posting longs on alt. This trade didn't work. But yeah, I mean, I don't have a comment on this guy, but, he's, who knows? But he's not following me and I was following him, and that is unacceptable. Look at that remember that Quasimodo I just drew out for you fucking guys? See that shit? I just drew this out for you guys fucking live, and it's playing out right now. Told you, Quasimodo. Mayne the motherfucking Mayne. There you go. Equal lows swept. Liquidity engineered. Absolutely horrific. This is going down more. This looks like it's starting to make like a 3 drives pattern. Low, low, one last low, and then I think some sort of relief bounce. We'll see though. We'll see. But the Quasimodo, come on. Who's doing this? Who's drawing the Quasimodo live? Nobody, I tell ya. Shout out from Williams Lake, BC. I used to play basketball tournaments out there all the time. That's not far from where I grew up. Yes, sir. Big respect for Kaz. He is not one to market himself, so I will just say, if you want to learn to trade Kitane, that'll join his BTG group, Scarface, Mr. T, and Trade Man, fantastic mentors. Not one to go about sauce like this constantly. It's not a signal group. Thank you, Tiffany. I really appreciate that. That's very nice of you to say. Thanks for your time and knowledge. Thanks, Gandalf. How is Amsterdam? Do you try the local goods? Of course. I mean, a lot of the allure of Amsterdam, which is smoking weed, kind of gets lost when you live in a country where it's legal federally, but it was still super cool. I liked Amsterdam. I had a lot of fun. I did kind of get caught in the tourist trap. I realized a lot of the cool shit's not kind of in that core downtown area for obvious reasons. They don't want, idiots like me coming in there and fucking shit up. But yeah, loved Amsterdam. I loved Europe, man. Europe was incredible. What do you say? I use Edgewonk. 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 Hello, sir. Up or down? Down. Manage him like ask me how. Yeah, there you go. Fucking big scammer there. Hello, is there any faster way to bust your account than revenge trading? Yes, using 100x leverage. But don't revenge trade, right? If you're wrong and you're feeling like you want to fucking revenge trade, just shut off your computer, log out, go outside. No, I mean, I own spot Bitcoin that I have on a hardware wallet in a safety deposit box that I'm just not fucking with. I'm not really trying to time the market too much. A lot of the spot Bitcoin I own, I plan on holding through all-time high. So I'm focused on the high time frame. I don't really care about the low time frame intraday shit. I'm not trying to sell all of my stack at 12K and rebuy it all at 9K. I have enough Bitcoin that I can margin trade and capitalize on those swings and not have to worry about, buying and selling my entire stack. Most people would have been better off just buying at 4K and just holding it, as opposed to buying at 4K, selling at 6K, trying to rebuy at 5K, selling at 10K, trying to rebuy at 8K. Because I know so many people that try and do that, and it's like your chances of just outperforming an uptrend are so low. So of course there's thoughts on Revenge of the Dreamer 3. Never heard of it. Can you talk more about, but I mean, doing a 1x short, or going into Tether is a great way if you're not wanting to, if you want to capitalize on downside, but you don't want to enter a margin trade with leverage on a short, is a great way to do so. Liquidity, yes, there's liquidity above highs and lows, right? People, traders, whatever, they place their stops above swing highs, swing lows, things like that. So of course there's liquidity there, but the whole meme like, hey, there's liquidity under every high and low and every equal low is just, it's a meme. People don't understand the markets at a deep enough level and clearly to think that is true, that every swing high has a stop above it. You know what I mean? I'm sure most swing highs have stops, but not any sort of meaningful stops. I don't care where your stops are, right? I need the high time frame, right? If you're trading big size, right? Like if an institution is trading millions of dollars of contracts, they don't care where your fucking stop for 5K contracts is. You know what I mean? They need huge liquidity to pair their orders with. So think high time frame. That's where the liquidity lies. High time frame. That's your hint. LTC USD weekly. Okay, I'm giving it 5 more minutes. No more chart requests, please. Because I gotta go. I haven't eaten all day and I'm hungry. This intermittent fasting thing, which is just me not eating until dinner time because I'm lazy, is fucking shitty. LTC USD. I mean, looks like shit. Yeah, I mean, this looks like, to me, right? Like, this is where I want to be buying LTC USD, in this gray. If we lose this gray, it's going to go way lower. So to me, like, this is pretty good buy area all the way down to like 69. If we lost this, I would be worried, right? Like we come here, I don't know how low it's going to go, but that would look bad. But I think chopping around in here would be good. And if it can kind of get above here, I think that would be great. Yeah, so White Wolf Trader, he's a guy I know. His posts are hindsight for sure, but he at least markets them as hindsight. And he's saying, hey, for educational purposes, here's how you could have entered the trade. I think that's great. It's a good way to learn. Like a good way to learn outside of actually just fucking trading, which is the best way, is to go in hindsight and say, okay, well, you know, this has this nifty tool where you can go like this, right? And you can eliminate price action and be like, mark all your shit and then actually see if it would have worked, right? And actually see if it would have worked or whatever, right? So that's a great way to practice in hindsight, but there's no better teacher than live trading. I have no comment as to whether White Wolf Trader actually trades. I have no idea. But at least he's not trying to pretend that the shit he isn't posting in hindsight. At least he makes it obvious that he's like, hey, this is educational. It's in hindsight, obviously. And you know, you'll see the people. It's the people who post shit and they post like, hey, hit my level. And it's like, well, where was that level before? You know what I mean? So just be careful who you listen to. It's under 9,000. Did it dip under 9K? No, it didn't. Don't lie to me. Don't lie to me. I mean, to me, XRP USD is at 30 cents. I mean, it's either gonna, this is like historical, the only place. The one bad sign is you have that bouncy ball meme, right? These bounces are getting weaker and weaker and weaker. So if it loses this kind of floor at 26 to 30 cents, it's going to 20 cents. So are you willing to take a potential, 30% haircut on your entry? That's up to you. But every time it's come to this level, it's bounced. Is it going to be different this time? It's up to you to decide, right? So yeah, I'm going to end the stream there, guys. It's been an hour and a half. Hopefully this was educational for you. Hopefully you guys learned something new. I want to thank all of you guys who follow me. It means a lot that I've gotten, just my count has grown crazily over the last year and a half, since April of last year, from like 900 followers to 50 fucking thousand. It's absolutely insane. So I'm in shock by it every day. It doesn't feel real sometimes. And, I never want to forget about all you guys who follow me and help make this possible. And you interact with my stuff. And I hope you guys know I try my best to answer as many questions as I can and share with you guys. Because, the way that I got better is from finding good people that, gave me the goods and didn't try and bullshit me. There's so much bullshit in trading and online Twitter, not just in crypto, but all online trading. There's so much bullshit on Instagram and Twitter and all that shit. It's hard to find real value, so Kaz would say value is scarce. And so what I've always tried to do is just share and show you guys you can learn to do this shit on your own. It's not as hard as people make it seem. If you put in the time and you put your mind to it, you can succeed in this business, however it's going to be, whether it's a part-time hobby for you for a little extra cash, maybe you want to quit your job. I'm not going to promise you riches or anything like that, but if you put in the work and study the right stuff, you can learn and you can do well. So I'll plug my fucking shit. If you want to learn with me all the time, I do about 3 videos like this every week in the Bitcoin trade group with 2 other guys. Some of the guys are in this chat listening, so if you want to come in there, we'd love to have you. Otherwise, I'm going to keep posting free content on Twitter. I'll keep trying to do these streams for you guys. I love and appreciate all of you. I'm very happy to be home safe from Europe. It was an awesome trip. Those of you who live in Europe, thank you for showing me such a, thank you for being such a welcoming continent. I had a great time over there. It was beautiful. I'll definitely be back. And yeah, we'll talk to you guys soon. Peace out.